Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Wednesday, June 12th, 2019. There's not a whole lot to report today. It's pretty much a consolidation day. The markets are down, but not very impulsively and not by too much. You can see here up in the right-hand corner, QQQ is down about 0.5%. SPY is down about 0.2%. So what I'll do is just recap what I posted this morning in the charts I'm watching, some scenarios for the 60-minute charts, highlight a couple things that stand out that I might not have covered recently, and then maybe just take a look real quick at the 5-minute charts for those of you interested. If you're not an active trader, when I get to the 5-minute charts showing you a potential day trade setup, you can just ignore that. Although the premises are really identical to taking a day trade or a very short-term trade on a, say, a 5-minute intraday chart as it would be on a daily chart. So we'll get to that in a second. Now the scenarios laid out here, the levels I'm watching are these support levels here. And as I laid out this morning, these are the overhead resistance levels, 185.95. We'll call that 186 again, round off. And then there's some, if that happens to get popped, you have minor resistance here, but we'll probably, well, I don't know. I'm 50-50 whether we'll see new highs if we get that taken out. And I'll show you why. The scenario I laid out this morning, if the market does, this is a consolidation day. And now let's just say this is a larger bull flag pattern. Okay, I laid out that small one the other day, right here, remember, on Friday, but that was foiled because it started to play out and then got sold into. So we could look at it this way. This is a possible bull flag pattern right here. You can see our flagging action. Let's say this is a flagpole. Now that's quite bullish because that would measure, if that's your flagpole, then it would measure way up here and take us out to new highs. So I wouldn't be doing my job if I didn't point it out. I'm not favoring that scenario, but I'll certainly respect it. What does that mean? Well, an impulsive breakout, number one, a break above the recent highs, and then that 186. And as I said, at that point, that's where I'm interested in scaling out of the shorts that I recently scaled into. So nothing, it wouldn't be a big loss. And if it turns out to be another fake out, gets sold into, we can always get back in. Here's where it gets a little tricky. I still favor downside from here. I still think we may have topped out, and I'd like to see this support level broken, but that's so far today, we've pulled back, and we're holding that line. Remember, I had this 182.24 level. It was a gap from the other day. Big gap right there, and then you have the bottom of the gap down here. So we're flirting with gap support now. If that gap gets entered, and impulsively, not, you can see if you split hairs, a couple little dips down into it, but slightly. That's not impulsively. You'll know an impulsive candle when you see it. This is an impulsive green candle right here. This is an impulsive red candle. They don't have to be that big, but these are not impulsive. So for all intents and purposes, that's a successful defense of the top of the gap. It's been testing it. I still favor the downside. If we pop there, that's what happens. All right. Now, if something happens and my alternative scenario, which again, I'm not trying to say, well, the market can go up, market can go down. That's a given. It can always do that. And I'm just not a big fan of, mixed analysis. I'll give you my thoughts where I think it's going. And again, if I'm wrong here and we do take out today, the highs from yesterday, then I can easily see a scenario like this where we'll extend these lines. We don't have any, at least not on this 60-minute chart, we don't have negative divergence. We did on the 5-minute chart recently. But we pop up here, and let's say we make a run at or around that 186 level, at it or just below or so, then reverse. Well, that would give us bearish divergence, just like we had negative divergence back here at that recent high that was the catalyst for this move down, and just like we had bullish or positive divergence right here at the recent lows. So that's a let's say my bullish most scenario right now. Not that we can't go up, but like I said, I'm showing you all possibilities. If we pop up there and we just keep on going and we burn through these divergences, what does that mean? If you move above the previous reaction highs on these indicators, the PPO and RSI, you no longer have negative divergence. And so that could be the stage for a rally and a pop to new highs. And again, respect it, and just don't get married to your trades, your views. The market can do whatever, it will do whatever it wants. And as of now, I'm still leaning towards the downside scenario. With an alternative, slightly more bullish but still bearish scenario that we pop up a little bit, slightly take out yesterday's highs, and then put in a divergent high on the 60 and then reverse. So that's what it looks like there. And on SPY, I always say I think any analysis is incomplete looking at just one and not the other, even if you're only trading one, like let's say you're trading SPY, and I'll show you an example of that in a second. All right, this is the uptrend line right here, broken back tested, everything I covered the other day. So there is potential flagging action right there, setting up, and that's a big flagpole, and that's a big move because again, you take the measured move for a bull flag or bearish, bullish or bearish. I'm sorry, a bullish pennant or bull flag formation. They're very similar. Flag just looks like this. Pennant, you have a slightly triangle. This is more of a flag, really. I'll draw it that way. And again, they have the same exact measure targets, so it doesn't matter if you have the shape of a pennant or a flag. You have the flagpole, which is the impulsive move leading up to right to the highs, and then you take that and add it. Now, how do you do that? If you don't have to pull out your calculator. What I do is I just grab a trend line. Here, I'll just use this one that's already here. Well, no, I'll leave that uptrend line alone right now. Let me just grab. I got all these trend lines here. I'm going to do like this. Come in a little higher so I don't move my existing lines. That's roughly the lows to the highs. Come down a little more. So when you take a trend line, then just add that trend line to the lowest point of the flag before it broke out. And if you hold it steady like I didn't move the trend line, it's going to give you the same distance. So there's your measured target, and that's why you don't have to pull out a calculator. That'd be up to about 309 or so. And again, that assumes that it breaks out, that assumes this is the bottom of the flag. We only have a potential flag pattern right now, but to try to quantify it for you from where we're at now, because I like to put things in perspective. That'd be about a 7% rally there. So if you are short, you would not want to be riding that one out. And if you're long, it could be profitable to trade. So there's a potential setup. And again, the same story here. If we just pop up on here to that 291-ish level, like that, make a equal or a marginal new high, and then reverse, that would give us again that 60-minute divergence there. That divergent high, and then could set the stage for a much bigger drop. So if I just can't tell you which one it's going to be right now. Still leaning towards that downside. Let's look at a couple other things that happened yesterday. I mentioned we had some bearish engulfing candles yesterday, and one of those was on Microsoft, the world's largest company, only one right now in the $1 trillion club, but that doesn't really matter. The Amazon and Apple aren't far behind it. So there's your bearish engulfing candle. Now, I'd like to see what the market is going to do from here, because like I said, right now it can certainly go either way, especially in the near term. So I'm holding off on this. I was considering Microsoft as an official short trade, but I'm going to wait for two reasons. Number one, what I just said, the market might pop and have another little high here. And more importantly, I won't short a stock that breaks down. This is one of my favorite patterns for shorting or going long in reverse. If you have a bullish engulfing candle, that's a big green candle that comes at the bottom of a downtrend, a prolonged, a clear downtrend. And the way I trade these, the reason I like them so much, that first and foremost, they are potential topping sticks. They mark trend reversals. As I mentioned, we had one back here before the big drop, this last drop that we had. There's a bullish engulfing candle. And so the way you trade them, it's pretty simple. When you get one, you can short the day you get it. Maybe if you're heading into the close and it looks like you're going to get it like you were here, you can put a short there. And at that point, I think a stop just above the high makes sense, because if you move back above there, you have a green candle, you've taken out the bearish candle, and it kind of negates that whole purpose of that pattern. So it's from yesterday's close, that would be what, a one less, give it a little room too, give it a 2% stop. That's above yesterday's candle. 2% stop loss to possibly make, if Microsoft goes where I think it's going, and I know this is a lot of you probably think I'm crazy, but I think there's a good shot Microsoft at some point in 2019 and or 2020 will be down here to back to $57, and that's a drop of, it's 131 now. That's a drop of about 56%. That's a bear market target. We're not in a bear market, at least Microsoft's not. The market may be, but Microsoft isn't. This is, again, the strongest FANG stock, the only one that's broken out the new highs, did that day before yesterday. My initial target would be come back down here, test those lows from December. Again, that's about a 25% drop. That's a swing target. Now, you can have a more shorter term targets. But if you look at it that way, okay, so let's say it's Randy, let's say your scenario plays out, but it's a long shot right now. Again, you risk 2% to possibly make 25 or 50 plus percent. Even if the probability of the trade playing out is below average, which I will say it is right now. Why do I say that? Because it is about as counter trend a trade as you can get. What I mean by that, this is a solid uptrend. The stock just broke out to new highs. If shorting Microsoft here is not a counter trend trade, then nothing is. So that's why you have a increased risk that this just will prove to be a little bearish engulfing that we continue on up. But again, it's all about the risk reward. So you decide whether you want to wager that bet, if it's worth it to you or not. And again, the reason I'm holding off right now, other than what's going on in the market, is Microsoft has support right here about 130.50ish or so. That previous reaction, we had several highs here. We tried it again. We tested again. This is what you want to look for on certain stocks that are trying to break the new highs. Came up here. That was an all-time high. It couldn't break out anymore. It failed there after about 5 sessions. Corrected, came back, tried again and failed, and came down hard. Finally, it broke out the other day. This is a breakout to new all-time highs. That's a bullish technical event. So we broke out, and now we're back testing. So the bulls want to see this, and it's quite possible we come in and back test that breakout and then off to the races. Maybe we burn through these divergences when we take out that bearish engulfing. But if we don't, then you have a failed breakout, number one, that's bearish. If you get another red stick tomorrow, it's additional, you're breaking support right there, 130.50ish. You're also getting additional confirmation on that bearish engulfing, and that increases the odds that there's going to be more downside. And you can, of course, trade it off this daily chart. That's my logical first target, about 123, because there's some support there, and then you can see down here about 115. So if you want to just, game a pullback trade. But like I said, trading can be tough enough at times, so you want to put the odds in your favor. And right now, I'd rather wait, even if cost me another % or two to see a break of that level, and also see the market confirm. Because this, I promise you, Microsoft's not dropping 20 to 50% if the stock market doesn't do the same. So that's why I need the charts of the broad market, and especially QQQ and tech to confirm. All right, so that's Microsoft, and let's just look at the 5-minute charts. It's setup I posted in the trading room today on a potential day trading op. And so what I posted first this chart of the SPY 60-minute chart. I'm sorry, 5-minute chart. Here, let's walk you through the trade. So that I haven't refreshed. Maybe it was a little more than an hour ago. They're time stamped. You can see. I mentioned here an impulsive breakout above or below this 5-minute descending triangle pattern, along with, there's italics, along with an impulsive breakout in QQQ below 186.60, and the intersecting uptrend line would provide a potential objective entry for a potential entry for a day trade or a swing trade entry. So in other words, you see you break out. This is a symmetrical triangle pattern. I don't have the lower line that well developed. There's support right here, and if you come down and hit it, you'd have an additional reaction there at 28,750. And so you can also look at it this way. It's a wedge type pattern. There was some divergence, I believe, just below that. So again, a pop above there would probably take us up to 298.22ish, and then a break of the downside would take us down here. Again, intraday stuff. Now let's look at the next chart I posted along with that, QQQ. And I said we have QQQ has resistance at 182.90. So even if you pop the trend line, give it the benefit of the doubt, because that's pretty good resistance. And this is something I look for when trading. Sometimes you might see a beautiful pattern, and if you're not paying close enough attention, I don't know if you guys ever played cards. I love Texas Hold'em, and you have 7 cards come down. You're playing 7 cards instead of 5, like 5-card draw. But you the ones in your hand and then the down cards, the cards up on the table. And so there's a lot of possible scenarios. Sometimes you think, okay, I've got 2 pairs, and you don't realize you're missing something. You might have a straight, or somebody else might have. So you got to look at all the scenarios, just like in that game of Texas Hold'em. You got to look at everything. Okay, so if all eyes are on that downtrend line, well, guess what? There's a pretty significant support level or resistance level right above it. So if we pop the downtrend line, there's a chance you pull back and get rejected off that level. Maybe you back test and go on up, or maybe it fails. So when I have two resistance levels in close proximity, keep it very simple. I wait till the latter of the two is taken out before going long. You can also see this volume of price histogram, these green and red bars over here. That shows you where all the buyers have been, most of the trades have occurred. And there's a thin zone between that level there all the way down to here. So that's why I think if we get rejected, we fall, and then you have to watch this uptrend line that comes into play here. So all these are all marked levels are support or resistance levels on these charts. So let's see what happened there. So we're going down. Let's see. Posted an update that SPY was starting to break out, but QQQ hadn't yet, and I had to revise this downtrend line for a little better fit than the first one. Let's see here. So that was SPY breaking out, and then went on to say right here that QQQ, although SPY broke out, and this is why I emphasize both need to break out. That big green candle right here, that was the breakout in SPY. It brought in, a bunch of buyers, whether they're program trading, people who use stop orders. You can use stop orders to get into a trade, not just exit. You can do a buy stop, and it says, if XYZ goes above, 182.50, enter an order to buy. That way you can get in front of the machines quickly, versus trying to enter a manual trade. Either way, they popped the stops. Some buy orders were hit, but look what happened. QQQ, this is perfect rejection. 1, 2, 3 candles at that trend line. So we didn't take it out there. And again, that's what invalidated or was did not confirm that breakout in SPY. So let me see. I'm pretty sure I did another update there. No, that was it. All right, so let's go to QQQ and see what happened since then. So there it is. So there's a breakout. See impulsive candle in SPY, what you want to see. But QQQ, the other quote-unquote big index I like to follow, failed. And you can see, and that's why I also say an impulsive and or a 5-minute candlestick close. Here's a little, that's what I mean, poking its head. You just need a little pop above there. That's a failed breakout attempt. It's just intraday, you ticked above there. So far, this trend line has contained it. And even since I highlighted it, we've had several more reactions, which helps to validate it now. Now, it can still break out. And it's one of two things is going to happen. It's going to break up or down soon. Why? Well, we're approaching the apex of this triangle pattern, this downtrend line and this one. And so this is just, again, day trade stuff, guys. If you're a long-term trader, don't get overly concerned with this. Although this, the same premises that apply to trading and technical analysis on these 5-minute charts do apply to the daily charts. You might see a pattern like this with daily candles. So that 182.09, that's pretty good resistance just above that gap there. I'm sorry, support, you can see, and you have a downtrend line. So here we are, we're pinching, we're wedging in this descending triangle pattern, which is probably going to pop, it needs to pop one way or another sooner or later. If it pops to the upside, again, you have resistance just above, as I mentioned. If it takes that out, there's your next stop. That's how it works. Pop that, you go up here to 180, 380. And if we break to the downside, well, that's also a pretty important support, because we've had multiple reactions there today. That's contained all the pullbacks, and there's a gap below. So if you pop down below 182 or so, probably going to be a pretty swift move down here to either that trend line or the 181.65 level, possibly more. This is that where we close, what was that, on Friday? Yeah, Friday's flagging type action, which is also the bottom of the gap, and that's also another natural support level / target, if we do move down right there. So these are the levels I'm watching, and again, we're in a consolidation day, and so even if we pop above here, it's possible we don't go anywhere. I mentioned that too on that trade setup, that whipsaws are going to be a little higher when you have these kind of slow grind days. Nobody's really doing anything today, bulls or bears. I mean, there's a little selling, a little profit taking, like I said, some follow through on that Microsoft trade. And I'll show you a couple more, and we'll wrap this video up. We're only at the 19-minute mark. We had a member in the trading room mention ICE, Jumping Bean, I think, mentioned ICE. And here it is. We had, just like Microsoft, a bearish engulfing candle. And as I said, I love these patterns. They're pretty high probability sell signals, especially again, look for them after an extended uptrend. If you can get other confirming sell signals, all the better, like a trend line break or something. For example, maybe I'd have to probably pull a 60-minute chart, but right here on ICE, there's an uptrend line. We had small, negative divergence right here. You can see the smaller divergence, not big, right from this point to this point. So you had a wedge pattern there. You got a bearish engulfing candle. And again, I love these patterns because you get them at the highs, and if you can confirm it with a breakdown, all the better, which you could back then, as I just showed you. It's not, I took those lines away. And then what did you have? You had confirmation the next day. So had you shorted ICE that day on the break of the trend line right there, or after, as we're heading into the close, you saw you were going to get a bearish engulfing, you short it with a stop above the top of the candle. You want a really tight stop. Sometimes you can set it in the middle or just above. I do about 3/4 up. And then look, you got a red candle the next day. At that point, you can add to your position. So you may want to, for example, like today, take a partial position, a half a position. You get the red candle. Nothing was better than that. You can see again, we broke the wedge, big red impulsive move, and so you could have added to it. And the drop from there was from the highs to low was a 16% drop. So just like then, fast forward to today, we have a divergent high. There's your negative divergence right here on the indicators. And yesterday we printed a very big bearish engulfing. In fact, that one wiped out not just the previous day, but the previous 3 days of trading. And so far today, we don't have a red candle, but that doesn't matter. That's a big bearish, and we're still well below halfway point in the candle. Is it red? Would it be better? Sure, it'd be better to see a red candle, but I'm fine with a small green candle. That also comes sometimes too, as long as, again, ideally you want to stay below the bottom half, or at least close below the bottom half. Sometimes I'll even see them spike up intraday, and again, that's why I like a stop just above the top. And let's quantify it for you. Right now we're trading 85.17. So you short it here, you put a stop above yesterday's high, you're talking less, and you even give it a little room from there, you still have a 2% stop, just like Microsoft, for what could be, this is my weekly chart on ICE. If this thing goes where I think it's going, that's a lot lower. And first thing, you'd have a move down. You could cover here's how I would trade this, and I may trade it. Micromanage a swing trade, come on down to this trend line, get a cover reverse on the initial reaction if and only if the charts confirm. What I mean by that, maybe there's divergence on the 60-minute time frame, a bullish candlestick reversal, or very oversold, something else. And then when that minor trend line goes, you have a longer term, more significant bull market trend line down here. These are support levels and potential targets on the way down where I'd expect reactions. But if you ask me where I think this stock will be a year from now, I think it'll be down here, probably all the way, maybe even come down to that 44, 54 level, but at least that 52, 55 level, that'd be my longer term trend target or long-term swing target. That's about almost a 40% drop. But first things first, and we need to see additional bearish evidence here. You need to see more, the stock continue to move lower, at least stay below that top of that bearish engulfing candle in the coming days, and then your next sell signal comes on a break of this uptrend line. That would be a first target. I may add this as an official trade. That's why I put up the targets here. You can see them right now if you want to take it. And then a break of that level, that's at 82.80. I always set my targets a little bit above support, and usually pretty tight on the first targets, because those usually you get hit. And that's the deeper ones. When you're really oversold, you may reverse shy. You can see down here I have the line at 73.32, but I have my, or 72.32, but I have the third target at 72.56. So all right, so that's what that trade might look like if it pans out. Again, something like this, breakdown here, next sell signal, a little reaction off there, and the break of that level takes us down to the next target, and so on and so forth. All right, we're going to wrap it up here, and let's just see how we close today. Maybe it's a non-eventful day, or maybe we get a ramp or a dump into the close, and that might give us a little clues for what's going to happen tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.